Mhm.
Welcome back. We're back with a Tip of the Tongue series with Chris Borg, who's one of the managing directors of 3P Accounting and Tax. Chris, delighted to chat to you today. I know that it's a very busy space for accountants right now. Lots of new things happening, lots of changes in compliance and regulations that small business owners and individuals need to be considering that you're working with. Thank you so much for your time. I wanted to ask you some questions around what the current incentives are. I know there's grants coming out, there's changes in information all the time. It would be really good to just get our heads around about what incentives and grants are currently accessible for businesses and individuals. And a little bit, if we could, unpack around that job keeper, job seeker. What are those differences? What are those things that are available right now?
Sure. Well, first of all, thanks for having me on. And yes, it is a busy time, and obviously everybody, all businesses and individuals, mind you, are looking to seek what's out there at the moment, and there is a lot from both a federal level and state level. And I suppose the good thing about coming onto a forum like this is discussing that, so people have somewhere to go to look at, rather than maybe getting 50 calls a day asking the same question. And JobKeeper, that word JobKeeper does come up every day. So certainly to give the audience and the people who tune into this a bit of information, because it has changed quite a bit from the very, very first time we heard about it, and we're all guessing what it's like, to what it is today. I was just reading an article just before coming on that the Treasury's estimates of the JobKeeper, that's how much has changed, blew out by $60 billion. So that's how much it has changed. So, yeah. So, but yes, the JobKeeper is the first one, and that's what I'll probably talk about the most, because I think most businesses are anxious about that, getting access to that. But on a state by state level, most states now have a government grant that is accessible for at $10,000. And every state is got different eligibility as to how it's rolled out. But on a intrinsic level, every state is looking to give access to those businesses that are really been impacted by the coronavirus or COVID-19. In New South Wales, for instance, the grants available to businesses that have suffered about a 75% drop in turnover. In Victoria, originally it was for industries and they had a list of industries such as retail, gyms, fitness centres, play centres, childcare that had been severely affected. What happened though is we found a lot of industries and even clients of ours that weren't necessarily in those categories, such as business brokers, recruitment, that weren't on that list but were severely impacted, that weren't getting access. So they bit the bullet and said, well, let's open up to everyone who was eligible for JobKeeper. If you're eligible for JobKeeper, clearly then you're affected. So that's how the goalposts have changed just with that. So every state has their own, and even councils have got grants available. City of Melbourne in our council region have got a grant available for website design and graphic design and teaching and redesign of your website, for instance, to generate. So that's that. So I'm encouraging clients to look at where their business is, their local councils. The City of Melbourne have been very, very, very adamant and helpful with rental, with landlords, as well as giving grants away. So City of Melbourne, if you are lucky enough to be working out of there is incentives available. But more specifically, two of the major things that come across our desk is the JobKeeper, and also for tenants, businesses who are renting, what are the incentives that they've got and what are the protections? So from a JobKeeper perspective, very, very basic, it's a $1,500 payment for eligible employees and business participants per fortnight. And that's expected to run at this stage from the 30th of March to the 30th of September, so 6 months. And Scott Morrison and the Liberal government have been very, very adamant that this is a 6-month process. And initially they thought maybe we might have to be in lockdown for 6 months. But as we can see, hopefully we are starting to get out. I heard on the way again to this that they're from June 1 in Victoria, 50 people are going to be allowed in cafes. So we're slowly getting, but I think people who, the media are starting to say, well, they're saying that in July this is going to stop, and clients are now thinking that this is going to stop in July. What I've been telling clients is that just because restrictions are going to ease in July, if you start all of a sudden pull the pin on JobKeeper, good businesses will fall over. There will be businesses at the end of this that will fall over because, as I say, this is an artificial economy. Essentially, this could be creating. But from my point of view, what I see is that you will have businesses that shouldn't go out of business if you cut the JobKeeper off completely in July. So even though we have a new normal in July, hopefully, the whole point of this is to still hold businesses' hands right through to September. So the way JobKeeper works is for every eligible employee, and I'm not here to talk about that criteria today. That's another session, I suppose. You could have another hour or two on that. For every eligible employee and business participant, the business itself, it's a business payment, will get $1,500 per employee. But most importantly, it's an arrears payment. You have to pay your employees, the eligible employees first, and then you get paid that at the end of the month, okay? So that's the most important. You must pay those. The whole point of that is it's a JobKeeper to keep business as an incentive to keep your employees on, even though your business might have suffered drop in turnover or in business. It's to help you, a way of keeping those employees on. From a landlord perspective and tenant perspective, what I find is, again, a lot of businesses can't afford to pay the rent. I've got a few clients that have got gymnasiums or Pilates that are not earning $1 at the moment, but obviously still have their rent to pay. So what I've been encouraging clients to do and landlords to do is engage in early discussions. And this we're talking about commercial rent. Obviously, residential has their own. So engage in early contact, especially if you're the tenant, you are the business that's in situation, and to engage with your business advisor or accountant, because what's going to happen is as soon as you engage with the landlord, and landlord should be engaging back, there's going to be information that's going to be asked, because under the landlord protection code, or the protection code for tenants, you need to be supplying information such as show that you've registered and are eligible for JobKeeper. You need to demonstrate your drop in turnover. Providing you do all of that, you then have the landlord who is then obligated to then seek and help with assistance in that matter. All right, so they can't just turn a blind eye to it. And there's this protection for tenants not being able to be evicted over this next 6-month period. So it's really important that there's early engagement. You get the information to a timely manner to your landlord, because you can't just ignore it and not pay the rent. Because if you do that and don't provide the information, you have still got the problem of being evicted. If you don't follow the code, you're no longer protected, therefore you can be evicted. So very important, if you want to be protected by the code, engage with the landlord, provide the information and come to an agreement. From the landlord's perspective, if you own commercial property and you ask to enter into an arrangement and you do that, what I encourage you there is to seek this potential relief with land tax and to go to your bank to try and get a deferral of your interest and loan payments. So again, in order to be able to do that, you need to provide and to go under the code, provide that protection for your tenant, then you're able to then try and seek assistance on your own. So engagement, furnishing of information is very important.
Yeah, thanks, Chris. I think that's a very common message that I'm getting when I'm talking to people right now, is that incredible need to keep communicating with people, keep letting them know what's going on for you, build that communication, make sure that the channels are working both ways, that people are getting back to you as well. I think that's a really important message to any small business owner right now, is to build that communication, not just with your staff, but with your external stakeholders as well. Yeah, brilliant. Thank you. That kind of leads on to my next question, which is about how does a business understand if they're actually eligible to apply for any of these schemes that we've just talked about, the grants, or particular the JobKeeper? What are the parameters around that? Has that been solidified now?
Yeah, it has. Although, again, it's a moving target, and I'll be very brief with the grants and the like. So every state has their criteria. What I encourage you to do, Google, search on the government websites. Every government, state government and federal to that matter, on their websites have a COVID-19 area and resource hub. of what is available. My advice to you is to read the eligibility very, very carefully and information requirements. A lot of them require you to have your lodgements up to date, i.e. BASs, business activity statements up to date. One, so you can prove that you're in business and you're employing. A lot of these grants are on the premises that you are actually employing employees, and up to a certain threshold, and to, I suppose, prove your turnover. Cynical people would say to you it's the government's way of also getting you your lodgements up to date, so it's a good opportunity for them to do that. Either way, it's obviously working. I've certainly seen an increase in compliance from that perspective since that's happened. So that's step one. So from the grants perspective, very important, read it carefully, slowly, go through everything required. From a JobKeeper's perspective, what you need to do in order to understand whether you are eligible is to, first of all, it's what they call from the turnover test. So the turnover test is essentially looking at your GST turnover for the GST legislation. And that is, without going into what GST and the definition is here, is if you've had a 30% or more drop in turnover in any given comparison period, you then become eligible for JobKeeper. All right, so that test on a very basic level starts off with looking at the March 2020 month and comparing it to the same period, March 2009, for 1 month. So if in that 1 month you've had a 30% more drop off in turnover, you become eligible. If you don't be eligible in March, you then look in April. If you have that same drop, same thing. If you're not eligible in April, then you look at your April to June quarter and project. Do you project for that quarter to be down compared to the previous period? If the answer is yes, you become eligible. If no, you keep moving. Now, if you're not able to meet March, April, or the April to June quarter, you then don't become eligible for the month of April, which means instead of being eligible for 6 months, you may be eligible for 5. So then you move on. You move on to May, you move on to June, July, etc., until you meet it. And if you don't meet it, you don't. The one question I get constantly about JobKeeper is, if I drop, do I need to have a drop every month for 6 months to continue to be eligible? The answer is no. Once you drop once, you are eligible for the full period from when you start to the finish. It's only, you only have a short itch if you start late. That's the first thing. So once you drop, you are eligible continuously. Why I get that question is because when you actually apply every month and we'll get to that shortly, is when you apply every month, they ask you for your turnover for the previous month and what you project. Now, why they're doing that is because they want to get statistics and see, is JobKeeper working? They want to see the growth. Since JobKeeper, has that stimulated the economy? All right. A cynical person will tell you that they're also looking at those stats and saying, well, business has now grown enough, we can actually cut the JobKeeper off now. And there is provisions, if you read the legislation, unlike other legislation requires to go back to Parliament and get the law changed, this has a sunset clause in it of 30 September, as well as the ability for the Treasurer to stop it at any time without going back and getting it changed. So that could be a way. Again, the government line is no, we're just using it for statistical keeping purposes. Now, there's a lot of confusion again with the turnover test in that, well, what happens if we has just started business? If we just took over a business, we haven't been in business for 12 months, or we were a startup, we had rapid growth, and now we've had a drop. Okay, even though there are alternative tests available, such as the average, looking at an average over a certain period. So again, my advice to you, if you want to look at your eligibility, the big thing is the turnover. That is what you need to be able to nail down. Have a look at the basic test and the alternatives test to see if you have that 30% drop.
Yeah, okay. I think that's really helpful information, Chris. I think that will answer a lot of questions for a lot of people. So it's kind of solidified, but not, it's still a movable feast. So I think, again, it goes back to that communication. Make sure you're getting in touch with your accountants. Make sure you're asking the questions around how does that interaction work. Absolutely. And that kind of leads on to my other question for you, Chris, which is, once you've established that you've got to the level of eligibility, how do you actually go? What is that process like to apply? It sounds like it could be a bit of a logistical nightmare, but so there are pitfalls and things, what, you know, that you want them to have their BAS up to date. what do they need to prepare? How do they go through the process, and hopefully have somebody like yourselves to kind of step them through that? What's your advice on that, please?
Yeah, sure. I mean, look, I mean, in general business, governance is you should have your books up to date regardless of JobKeeper or not. So majority of our, 90 to 95% of our client base has had that. Their books up to date. They're on a good bookkeeping program. I think that's really important for any business, but particularly highlighted in JobKeeper. Good bookkeeping program with a good payroll system, such as Xero, which is a really and they've really come up and stepped up with their tools in regards to JobKeeper recently, adding a lot of like turnover test calculators, self-enrollment into JobKeeper, etc. But having that up to date helps when you're doing just very basic comparing your turnover. If your books aren't up to date, what are you comparing to? Contemporaneous records is so important when it comes to the taxation system. And make no mistake, the JobKeeper is through the taxation system. It's when you lodge your tax returns, you don't put deductions in without knowing the records that are there. You're not supposed to claim the deductions and go back later and make the receipts up. That's not what you do. So in the end of the day, contemporaneous records, as and when you're doing it, you got your turnover test, have your turnover test there, have your records up to date. They're not up to date. That's the number one thing you have to do before you even consider JobKeeper. And for the unlucky few that haven't had their books up to date and they call me and they say, we want JobKeeper, we're not touching JobKeeper until your records are up to date. So Shane, you're absolutely right. It's number one, and that hopefully will hold these businesses that survive in good stead later. And there's no doubt that's what the government is trying to do. The next step is either yourself, if you want to do it yourself as a business, you need what they call a MyGov ID. So that is a government app where you are identified, and there's steps to go through. And again, it's another session in itself to apply for a MyGov ID, but essentially gives you access to the business portal. So the business portal is where all of this is done. It's a government portal where your business is on there, Excel, your tax accounts, etc. If you don't want to do that, can't do that, go to your accountant or tax agent to do that on your behalf. And obviously there's process and progress for engagement you have to have with your accountant that your accountant will deal with. But whether you do it through your MyGov or your business, so for your MyGov or your tax agent portal, the number one thing you need to do is, first of all, confirm you've got your eligibility for keeping those contemporaneous records. Once you have confirmed your eligibility, you need to advise all of your eligible employees that you intend to enrol in the JobKeeper and offer all of your eligible employees the JobKeeper payment. It's a one-in, all-in system. You can't say, well, Betty, I'm going to allow you, Johnny, I'm not. If they're eligible, you have to offer it. It is up to the employee to say, no, I don't want to claim it, or I'm claiming it from somewhere else, or I'm not eligible because I could be on the wrong visa or I'm temporary or whatever. You have to knock it back. Once you've then identified those employees, they need to be given a form, which they need to consent to be in the JobKeeper program. Okay? Once you have done that, you need to make sure that you enroll with the tax office through this portal. It's an enrolment, it's a one-off enrolment. And in an enrolment, you indicate the month that you had the 30% more drop-off. You identify the amount of employees and eligible business participants that are going to be eligible for the JobKeeper, and then you put your banking details and enroll. Once you have done that, you need to go through your payroll system and register the employees who are eligible for JobKeeper. And that's a simple process. If you have Xero, a program like Xero or MYOB, you go to the employee's payroll settings, you click Start JobKeeper, and the fortnight that they've come available. And every fortnight's counted. So the first fortnight, 30th of March to the 12th of April, was fortnight 1, second fortnight, fortnight 2, 3, 4, 5, whenever they become eligible. So that's the next thing you need to do. The third thing you need to do is make sure that each of these employees have been paid their $1,500 a fortnight as a minimum, okay? Now, employees that you're already paying more, they're fine. They're eligible. Anyone else, even if they're only getting $200-300 a fortnight, $500 a fortnight, you must top them up. And that's been the big stress of smaller businesses, hospitality, gymnasiums. They might be only making a few $100 a week. All of a sudden, not only are they not getting paid, getting income in, but they're now expected to carry this extra burden. to cover that extra cost. So that's why you've been seeing all of these banks coming up going, we'll prop you up with short-term loans, which again, I don't agree with. I think it's the wrong way of going about it, but that is the system that's been introduced. So make sure that by the end of that period, by the end of the month, you've made your payments. Then on the 1st of every month, you must apply. So there's 6 applications to do, start of April, May, June, July, etc. You must apply. In that application process, you need to state your turnover for the month, as I said previously, and what you project to do for the following month. You need to count the amount of eligible, you need to state the amount of eligible employees. If you have a bookkeeping program and you have single touch payroll and you've done the right things on the back end, they will flow through to the tax that application automatically. If not, if you don't have single touch payroll system, you have to manually put the employee's details in. All right. Then you confirm the banking details and press apply. Now it was 7 days from the end of the month to talk about moving pieces. Yesterday they announced you got to the 14th day of every month to do that application. The reason why you need to apply every month, one, for the statistical keeping purpose, but number 2, you need to confirm the eligible employees. It's not a case of, well, our turnover's gone up or whatever, we're no longer eligible. It's you might have an employee that's left. You might have an employee you haven't paid enough. So they're no longer eligible. So the number of eligible employees might drop. That is why. So again, once you've done that, you generally by the 15th of every month, you'll get paid your JobKeeper. And that's the process. So the initial part is pretty difficult, more so because you've got to take a lot of care, and I'll talk about sort of pitfalls a little bit later, but you've got to it's a lot of due care and diligence, not only on behalf of the business, but the tax agent that's applying. You've got to show due care and diligence. Also, you need to do the initial enrolment and get all the forms together. Once that's done, you keep your records up to date. The application process every month is very easy and should be streamlined from there.
Chris, thank you. That's really, really succinct and helpful. I guess as a business owner, my only concern would be, might there be any sort of consequences down the line, any sort of risk that I'm going to have to pay this money back? And I know we maybe don't know the answers to that at the moment, but have you been given any understanding as to what this is all going to look like for people at the end of the 6 months?
Yeah, I mean, look, there's certainly been messaging around and integrity measures because, look, let's be honest, unfortunately, where there's good, there's always some business parties or groups or individuals in the minority, mind you, that will take advantage of this and do the wrong thing, promoters of such things. So, look, every incentive, every grant that's been out there, whether that's the one-off $10,000 payments and whatever have you, they do say that this could be subject to audit down the track. Okay, that's come out. That's the messaging. So what they're saying is make sure you got your records in order. That's why I talk about contemporaneous records. You do your tax return. Don't put a deduction in if you don't have the paperwork for it. And even though you're not getting audited then, you need to treat that tax return as when you're lodging it as if you're guaranteed to get audited. And if you don't, that's a bonus, okay? Same with the JobKeeper. It works under the same premise. It's a self-assessed system. You are self-assessing. You are saying, I assess that I am eligible for 4 employees. I've taken due care and diligence. I've put all the information in, okay? I have all the records here, okay? I declared to the government that this is correct, okay? So at the end of the day, if you do get audited or checked, you've got the information. Now, the ATO has been very, very clear that during this period, they need to make sure, especially the early period, they're just going to allow the payments to go through. So if you're out there thinking, oh, I'm doing it a bit dicey, or I don't think I'm cutting corners, I'm making it work, and you've received the payment, don't think you've gotten away with it, because they will eventually check. Now, like I was saying, they're not going to check every single application, and a lot of businesses will just go through. It's just like, again, I'll go back to a tax return. They look at the high risk application. So the tax returns, the individuals with the high deductions, they'll check. What businesses are they going to be looking for when it comes to JobKeeper? Well, they're going to be looking for industries that perhaps really, in anyone's mind, really haven't been affected by by coronavirus. So as an example, potentially if you're a supermarket, are you going to be affected by the coronavirus? Probably not. If you're applying for JobKeeper, it's a bit sus. They're going to be looking at those sort of things. Got a lot of employees. You're applying for the JobKeeper, high volume amounts. They're going to be looking for those. Now, what they've said, and from a tax agent board, we've also had messaging from the tax practitioners board. So from our end, they're looking for agents that are promoting doing the wrong thing, even for their own business. Now, what they're saying is honest mistakes. They'll work with you to try and get that. And the consequence is you'll have to pay it back. All right. If they find that you've made an honest mistake, you've got your records, you've done the right thing, you've done the best you can to get it right, then it'll be payback, slap on the wrist, no interest or penalties. But if they find that you haven't kept records, you've just done it quickly, then you're going to find it hard to argue that you did take due care of it, that you weren't promoting. Okay, so then there's more of a case for not only penalties, but also criminal charges. They're looking at that in the very select few. So if you are, and I've said this in previous webinars and seminars and videos that we've done with our own business, this is not something to muck around with. The money is there for businesses that need it. If you do not need it, do not access it, because it just puts the country back fair way, and it's not there for you to be used. And we certainly don't want to be seeing any of that in our own business. And look, we've had to tell clients who aren't eligible, you're not eligible, don't even go there with it. And that's the reality that I've been telling. That's what I've been telling clients. So in the end of the day, yes, there are pitfalls if you are thinking about doing it. If you are an organisation out there and it's been in the news. If you're an organisation out there that's promoting helping people with COVID-19 stimulus, and you're trying to invent ways to get it, they're going to come for you. But the people doing the right thing and are generally eligible, which 99%, and certainly all our clients are who we have applied, just keep very good records. Keep it as you go. The ATO are going to be understanding. If you feel like before applying it's a bit of a risk that you haven't got your records, just get the records up to date first, then apply. This thing's not going away, even if you've got to sacrifice 1 month of payment to get it right. Don't rush it, because that will hurt your chances later, potentially risk being exposed. So do your homework, do your due diligence. The answer to what I've said, the risk is you've got to pay the money back, potentially worse. But if you do your background work, you'll be fine.
Chris, that sounds like really great advice. Thank you so much for your time today.
No worries.
I'm sure you, like a large number of accountants, are trying to sort of fight their own way through and understand the system for their clients. So thank you so much for unpacking a few of the sort of very current but ongoing issues for people. I know that they're saying they'd like everybody back to their offices by the 1st of July, but as you know, that's changing day by day as we get new cases coming. So I think this is, as you say, very much an ongoing situation. So most important is keep informed and speak to your accountants or advisors that you would normally have a conversation with to make sure that they are on top of helping you get this sorted and getting it sorted in the right way for your business.
Absolutely.
So thank you so much for your time, Chris.
No problem.
And I look forward to speaking to you again very soon.
You too.
Thank you.
Nice, thank you.
Bye.
Bye.